And so I just wanted to record this kind of impromptu for days like this where the market is down pretty heavy, 4% today alone. That volume is picked up pretty heavy. So it's been kind of in a free fall the last few days. We can scale out to a 9-month chart, kind of see what it looks like in relation to the big picture. Or you can even scale out to a 2 or 5 year chart and kind of, it's pretty drastic. The volume is super high, 291 million. The highest that volume has been back then was back in 2016. Matter of fact, let's drill in here so you can see it. So close to 291 million shares were traded today alone. The last time it was that high, it was back here in 2016. But look what happened. It dropped down pretty heavy, and then it shot back up. So I'll touch on what I think here in a second as I'm recording this here on February 5th, 2018. But we can also look at CNBC. People are probably getting scared looking at CNBC. They're giving all these reasons while the S&P 500, the Dow plunge, and the selling continues in after hours, which means tomorrow it may open even lower. Dow plunges more than 1,000 points. Stock market loses more than $1 trillion in value. Biggest one-day drop ever. This kind of stuff instills fear in people. And I recognize that I'm a weirdo, meaning that I get happy when the market crashes. And I temper that excitement with empathy towards the people who are suffering right now, the people who don't know how to trade options, who don't know what me and my tribe know. Because today I made $1,000 on this down day alone, and it's fluctuating in real time because the stocks are still trading in after hours. So, I know other people are suffering, and here I am making money overall. So I'm not really worried about it. There are several reasons why I'm not worried about it too, which I'll get into in a second. But I just wanted to show you that people tell you that this is normal, you just suffer through it, and which it is normal, but you don't have to suffer through it, because I just showed you real-time proof that somebody made money today. So when somebody's suffering, on the flip side of that, there's somebody benefiting from the same event. And don't attach any judgment to it, because if you attach a judgment to it, like that's wrong, that's not fair, you'll never be rich. It's just a fact of life. There's no right or wrong or fairness to it. It's just a fact of life. I know things that other people don't know. I resolve that by teaching people what I know and coaching other people. I could keep it all to myself, but then people call me a rich, greedy jerk. Now I share it, and they call me a snake oil salesman. So it's neither win-win. But regardless, I'm happy I have a tribe. I'm happy I'm teaching people how to make money during down markets and how to protect themselves from moments like this and create bulletproof strategies where they don't have to really worry about drops like this. Like, I am super calm. I'm super happy. And the reason I'm happy is because drops like this, there's several reasons. The rest of the reasons you'll learn in one of my programs if you ever join. But one of the reasons why is times like this give us low risk entry points versus entry points at all-time highs. Let's come back again to 2016. Okay, 2016, where the volume is that high again, it just had a temporary dip down, right? This is a low risk point. It's after it's already crashed in price. It could crash further, but it didn't. It shot up from there. So if you had got in right around here, bought a call option or some kind of trade or investment where you made money if the stock went up, even if you just bought stocks, you'd have made money when it finally rallied higher. Now, I consider that a better entry point, and this is a change of a frame of mind that I had. It took a long time to get like this, because I used to fear these down days like everybody else, because I'm like, oh, I'm losing money. But now I flip my thinking. I like the down days because they give me low risk entry points versus the entry points right around here. I entered a bunch of trades at the beginning of the new year. And yeah, I made some money as the market went up, but this was a higher risk entry point because it was at an all-time high. So now that the market is kind of pulling back, it's lower than where it was when I first opened my trades. I'm like, cool, I got a better entry point now, which means I have the rest of the year to make money from this very low entry point. It's typical buy and hold, the same principles. You buy it, they say buy on the dips. You don't sell on the dips. Most people sell on the dips. Days like this, they're scared. They're probably cashing out their long-term retirement account. No, these are the days, if I was a long-term buy and hold investor, I would buy more. The market, from where it was, the previous high to now, maybe close to 5 to 10% drop. I'm not going to add it up here for time's sake, but that's cool. I'm getting my stocks cheaper. That's for a buy and hold investor. And as an option trader, it's the same principle. I'm getting in at a very low entry point, and if the market goes up, the way options are super leveraged, and members have seen this proof of this. As a matter of fact, I can just I have my spreadsheet pulled up. Well, I won't pull up for time's sake. Just know that if I bought a call option right here, where it's at right now, and the market rallied 4%, from this point, the call option I usually buy, it would double in price. All the market has to do is go up about 4% for my entry points, and it would almost double in price. And as a matter of fact, I said I wasn't going to pull up my spreadsheet, but I'll show it to you here. There's already a trade this year where I did that. I bought 2 SPY call options on 1, 2, and you can verify this. You can see where SPY was on January 2nd. I bought them for about $600 there, and then you can see there just what, 116. I sold one of them when it doubled in price, and so just selling one of them paid for both of them. So I still have one on, and it's what we call a free trade, playing with the house's money, things like that. So that's what, and just in that short time frame, a couple of weeks. So that's what I'm looking at doing right now. That it's fell so far, I know that if I get another one and then the market recovers from here about 4%, that will also double in price. So just want to drop in, give you some encouragement if you're suffering through this right now. Be encouraged. There is some hope. There's things you can do to offset suffering through moments like this. So you take care, and I'll talk to you in the next training update. Bye-bye.